Video with Traders Profit Club. Good to see you guys back. Looks like we've had some really good moves over the last day where the market has came from this area at 13,500 and then now has dropped down to this area at 12,500 as well, or even lower now, 12,350. So that being said, you guys, is really good on our part, because last week we talked about how we're going to see a market correction, how we're going to see price go into a different area and structure. So now we can actually make our strategies and see exactly what's going on. I mean, we could have took this this short area as well, but sometimes you need a little more confirmation just before, because as you can see on like USDCAD, for instance, we see that the market had a huge spike out of this upside, even though that the market was considerably at its highest high, where we can look at the 4-hour chart, we can show that market price was already making a huge high formation. So we could have did the same thing for the US dollar, USDPY, but at the same time, we didn't want to just take that, because a possibility of a stop hunt to the high could have been very detrimental to a lot of people. So we wanted to wait for that confirmation. So what we decided to do was wait for that position to be set up, and then after we saw that position, buy on the low, because you know that there's going to have to be a retracement to the upside. We try to go with the psychological levels. So we saw that previous support structure was at this 1300 flat area. So if we drew the angular horizontal resistance, then you would see that it would be right at this area. So the one thing I want to teach you guys today is about knowing when the market corrects and knowing when these structures are going to reverse or have a retracement. So as we can see, that Sunday or Monday was a huge consolidation day. So it was a little different than normal that the price would actually break out on that Monday. Usually it's throughout the week, but since we know that the market has been, basically the end of the month, and the proprietary traders and the dealers are going to be looking back to take money back into their books, they have to open up price and just put a lot of volatility and a lot of price movement at a really quick area. So what happened was that we saw the consolidation at the high. We didn't take that buy position just because, as we saw earlier in the USDCAD, it's making that stop hunt. So we decided to wait, and then we saw it break that 1300 resistance, and now it's a go for the downside, because now it's breaking this previous low. So that being said, we're going to have that retracement, which we caught right now, and we're already up a little bit of pips. And we also that signals in the Discord group where we're looking for a retracement back to this level, make that swing high for that first swing high, and then we're going to see it retrace, and we're going to do another short position. So we're going to counter trend and continue trend this trade this trend as well. So it's going to be probably by the end of next week. Hopefully, we'll be able to see lower levels. You know, we possibly could see some consolidation just for a little bit. So I'm not going to just go crazy with the signals, you guys, because I just want to make sure that they are, they're valuable, and they're actually, created with, really good strategy. So I'm going to actually take my time with just, giving you guys the strategies that, could possibly, be a potential gain. I want to make sure that those things are really executed, and actually, I'm 100,000% confident that that's going to go in that right way. So bear with me, you guys, on the signal, especially on the ones that that I'm going to be doing for the USD JPY, just because I want to make those super execute and perfect, and the Great Britain Pound and the USDCAD. So I have one that I'm actually looking at right now, and we can see that the USDCAD is actually showing the stop hunt. So what's happening is that there's a ascending breakout, and then this is a stop hunt, basically getting out all of these buyers that are in the market that are buying into this area. They're going to trap the buyers, and after they trap the buyers, they're going to swing profit down and stop them all out before the end of next week. So we're going to wait for that entry to be established here. We want to look at test that 13,500 or 13,500 level, and after it retests that and it does resist, then we're going to take a short position and make some major profits on that trade. So that's going to be a super big, awesome position we're going to be taking, and that's what we talked about previously. We talked about false wedge breakouts and how the market actually likes to induce those buyers into a certain area and then takes it back after a quarter of the time. So that's definitely a trap right here. So if you guys are long on USD CAD, make sure that you're looking to get out of that position near soon, because that is going to be a trap to trap the buyers, trap the buyers from this upside liquidity down to the downside. So that is really good data, and making sure that we obviously stay accountable on the USD pairs as well. So we just, we have gold. We can look at gold, and gold obviously will say the same thing. The opposite is what market price is doing right now. As you can see that it made that swing high, and then we made that swing high, and then it made another retest. So we already made a structure here. So we can see that the previous structure is now support. So now that previous structure is support, we can now amplify our trading strategy to the upside, because we can know that gold's going up. We can see oil prices are down. So oil is integrated with the dollar. So since the oil prices are integrated with the dollar, we should be seeing the US dollar go down. So when I look at USDCAD for that same reason, I see that market prices are definitely looking to reverse to the opposite side. So really, really important information, you guys, on the market predictions, on having those reversals, having those strategized correct, and making sure that everything is actually formatted correctly in our perspective. And then obviously having confidence to take the trade as well. That's obviously the most important part. So as well, we're going to talk about the Great Britain pound. We're going to see how the price is actually going to retrace. We want to see this price actually drop back a little more, because we see that there's trapping buyers right now. They're opening the spread. They're trapping these buyers to get buy orders opened. And then what they're going to do is just spike price down, and then they're going to spike price up. So that's what we're looking for. That's why we took that short position on the Great Britain pound US dollar, is because we're going to see these spikes happen to the downside. And it's Tuesday, so we're going to see that little retracement to the downside. We might see a little consolidation, but for sure we're going to see a retracement to the upside. But before we see that, I want to make sure I see that momentum as well gathered before we see that full bullish reversal. Because as well, what I like to see is that this is also a morning star. You can see the formation already established here. And then not just the morning star, but you have other formations as well. These wicks, all these candles are showing rejections. So if these candles are showing rejections, price is going to go the opposite way, or it's going to go a different way in general. It's not going to have that sustainability just yet, especially when it's making lower lows on those wicks, what I like to call star candles. All these are called indecision candles. Your indecision candles, the indecision candles are very, very important, because what happens is that when if you have anything where the market comes into this into higher peaks and it starts to reject price, then that price is actually going to be showing the retracement, because all these mean is a rejection of price. And if you guys have any questions, please feel free to put in the comments. I'll totally answer any of your guys' questions as I go forth with this video. So moving forward, you guys, that's why I wait for this rejection candles. I wait for usually a 3-candle formation, something that looks like this, where price is actually making 1 candle, 2 candle, and 3 candles to the downside, where 1 candle is first rejecting at high levels. The second candle is an indecision. And if that third candle ends in a bearish, or it could be bullish if this was a evening star, then that's showing you indecision in the market. That shows you that possibly the market could reverse to the opposite side. So it's really important that we look for these formations, especially these 3-candle formations, before the market does turn over, because now we can start to make that confirmation for that entry. And that's everything's about entry. Everything's about entry at the end of the day. If you find the right entry, you have low drawdown, you have low exposure, you're not having a headache, you're not FOMOing at the mouth anymore. You're composed, everything is in sequence. You're in synchronicity with the markets. You're not really trying to overextend yourself mentally. And that's the big thing about a lot of traders. When they try to overextend themselves, when they try to amplify or try to just over amplify their trading, they start to, obviously their vibrations are correlated, right? So they start making decisions out of a congested vibration, and that obviously just stirred to anxiety and just frustration. So you got to make sure that you're in that, you're calm and you're peaceful when you're taking these trades, because you don't want to be just totally out of whack, because what your vibration is totally reflects in the markets as well in your life. So when we just try to the thing is that when you take, especially if this is the reason why, you guys, so if you guys want to know why I took a short position on this, is because the market is showing that it is still, sorry about that, the market is still showing it's dropping, even though it's making lower lows and lower highs essentially, even though it's more so of a consolidation. The reason why I'm still short is because there's all this liquidity, and I know that there's other short areas, pending orders over in this area too. And knowing that there's a psychological, a key support level right here, I know that the market is still going to drop just a little bit more before we see an upside retracement. And we're probably going to see the upside retracement, Wednesday and Thursday. We talked about midweek reversals in previous videos, how the market likes to wait a couple days before it makes that reversal. So that being said, it's really important that we wait for, and there's a lot of duality when it comes to these time frames, and not just that, but even the daily or even the daily structures. If you know the daily structures, now you can get a really great target, basically a really great entry as well. So that's the reason why that we still are short on this position. And we can look at the 15-minute chart. We can also see that it's making lower lows. We obviously are seeing wicks to the downside, but we're seeing wicks to the upside too. So we're probably going to see that break to the downside in the near future, probably around Sydney session. So we're going to see that in a couple of hours. This is obviously going to be a trade we're probably going to be taking for probably a day. It's probably going to be a day, probably like a 16-hour trade, a little less than 16 hours because this is about a 50 pip trade. So and Tuesday, the volatility for the Great Britain pound is a little low. Wednesday and Thursday, it starts to pick up. So we'll start to see a lot more volatility and a lot more market play throughout this week. So that's my play on the Great Britain pound. And for the Australian dollar, it's pretty essential that we're as well still going into the short area. The reason why we're still short is because I looked at the 4-hour time frame, and what I saw in the 4-hour time frame is that the market is still making lower lows, and I want to see somewhat of a W formation kind of form, which is kind of essentially, it looks like a W where there's a head and there's kind of a two peaks before it drives price to the opposite direction. Just because the market coming from this area and then to shoot out, it needs a lot more momentum. If it makes another structure leg low, then it has more support, and then that gives me more confirmation. If I'm just doing it through a range aspect, it doesn't give me that much that confirmation. I'm not that confident when I'm taking that position. So it's about just being patient, and also not just being patient, but just being very agile about taking the time out just to map the charts out on the lower time frame. So like I wouldn't honestly take that trade on this time frame because it's not really showing me any confirmation. What I would do is that I would go to just a shorter time frame. I would just make sure and map out that it's obviously giving me still confirmation as well. As we can see, that market is still showing that downwards structure momentum because market price is going lower, broke out of that consolidation, or broke out of this range consolidation, which was a little kind of like an uptrend, but not really. It was more so of a range consolidation. Broke out of that area, made that test at 71500. That's where I thought, I'm like, okay, 71500. If I look back at previous area, then I can know that price is going to be formulated around that area once again, because when the market likes to test, it likes to break out again and then retest that same area, and then it likes to make a move to the opposite area. And because we were in a huge bearish trend for some time now in the Australian dollar, then I know that we're going to be starting to see that there is this breakout of this angular support. And now this angular support, or resistance, this angular resistance is now becoming support. So that's the reason why that I took this position the way it is. Now this is more so of a breathing room. As we said earlier, guys, I took this trade about like a couple weeks ago, and I obviously got stopped out because I didn't like to see that there was a retracement here, and it was basically having those 3 levels of rise and then obviously stopping back all those buyers. Then I forgot that the market trends 50% of the time and it consolidates 50% of the time. So that being said, the market is in consolidation right now, and this all is a range consolidation before its next breakout to the upside. So that's all we're doing, is we're just waiting for that nice entry to hold that position maybe for a couple days. If you're a swing trader, you can hold that trade for weeks, if not all until 2019, because we're going to be seeing an Australian dollar going into higher highs of next week. and that's going to be super important to catch those entries as well. So I'm going to also talk about Bitcoin as well, because Bitcoin is obviously something that is going to be huge for 2019. We're going to be seeing the market structure of how, like, where Bitcoin possibly could be going in the next couple weeks, and if not, where is it going to be going in 2019. So honestly, I do see Bitcoin obviously making highs into the market. So I see structure and price go into new levels, and then once I see that breakout of new levels, I want to see it obviously break those key elements of where it was retesting, and then if it's now making that support, then I can consistently do that to the next level, and it's honestly like stepping stones. So all I'm trying to look at the market is that if the market keeps on making support, breaks that support, makes a stepping stone, and goes higher, you know, and it can look in all different ways. It could be swing high, swing low. It could look in totally different areas. But as long as that area has confirmed as a support level, then we can define that the market could possibly go the opposite way for some time. But doesn't mean that it's going to go for a long period of time, because the market can just make that support, false support, induce those buyers long, and then again break their stops and break all those buy positions, because everybody's really antsed about buying Bitcoin right now. But what you got to understand is that you have to be careful, because the market is this is a very volatile market, and not just that, is that the market, they will like make you, they'll trap you basically. They'll give you time to basically go long, and then they'll consolidate price just like they did previously earlier, you know, and then they'll just drop price once again. That's just, you gotta be really cautious about that, because that's a huge reason why a lot of traders lose a lot of money really quickly, is by not being able to trade correctly with their strategies. They're really like antsed up on just trying to get into a position and then obviously making money. We all want to make money, obviously. It's a part of the business, but it's about being more consistent and being able to have a better strategic plan that over time will give you more stability than just, you know, riding it for a little bit and then losing all your money again, and riding it for a little bit and losing all your money. That gets tiring after a while, you know, where you make a bunch of money but then you just give it back to the market over and over again constantly. You just want to give up. You'll stop being a trader, you know. So it's about having that patience and having that ability to just be able to take that consistency and taking those steps away from having that the pressure behind you, or having that, you know, the feeling of I have to make money, I gotta do this, I gotta do that. You know, that's just, you know, that itself was definitely going to stop you from getting to that next level of trading. So when where else that we're going to be looking for this area right here is that this price action is going to be showing a higher high right here. So this market, where I'm seeing this higher high, is that I'm only actually giving this barely any time. I'm not going to be showing it for that long. Market price isn't going to be going in this direction for long. So that's why my exit's going to be here. Instead of price actually showing this lower low, or showing that it's going to break faster or even break down from this areas, because I see that since there is this first structure right here and then second right here, I can already tell that market, it will have time to have that swing high. And then once I catch, and then obviously it could go up a little higher. It can go to 250 if it wants. It doesn't have to essentially be at that flat line level. It could have that, you know, higher level of retracement. And once it has that high level of retracement, then we can start to see, you know, downside momentum as well. So it's very optional as well if you guys want to see it play out differently. And if you guys have any questions on like how the market, you know, plays out per day, you know, please put in the comments, because I'll map it out for you guys, like where the market will obviously be assembled, you know, through a daily element, because there's daily ranges that the market has to play by, and you can be able to make it precise. It's called the daily average range. So a lot of people use this strategy to quantify whatever trading blueprint they have, so they can now have that foundation on to basically execute their trades. So that being said, you guys, it's just super awesome stuff that's going on right now, you know, with Bitcoin, and we have you know, fundamental data that's coming out really soon. So we're going to keep an update on that. Obviously you guys can see I have Market Watch open over there, so we're going to be able to break that out. So really cool stuff. And Another thing, once again, that we saw the market test 3 levels again, or 3 highs again, just like previous area. We saw it earlier in the, oops. Oh, it keeps on doing that. Sorry, guys. Price did the same thing once again earlier. It basically made these 3 highs last year, and then we had the same formation happen where price now dropped lower and lower and lower and lower. So we could possibly see the same thing once again with price showing this area and showing how market is now in consolidation and structure. So there you go. Let's erase this. All right. If you guys have any questions or concerns, please feel free to put in the comments. I'll definitely be able to answer anything. If you guys have any questions about where Bitcoin possibly might be going, where USDJPY it could be going for the full year. I mean, this is very there's a high probability that the market is going to be doing a big retracement, but you know, the market will obviously take time on making that retracement happen. So if we're going to be looking for a full-blown reversal, you know, the market is honestly going to take a little time for that, because this is just an area of consolidation where the market will only be able to play out from one direction to the next. And then, sorry, there's something wrong with this area right here. Let me just grab this one. Perfect. All right, and this area is actually coming from this May. So from March, excuse me. So if we do see market retrace to these levels, which is March, we're not going to see that happen until later next year. And maybe we'll obviously have this ability to touch these levels of 105 or even lower because of where market looks like it's going and where gold looks like it's heading, and just how oil prices have been down so much lately. I mean, they're just dropping, you guys. It's just nonstop with no lower lows or lower highs. It's just been a straight like free fall. Then I can start to see that price of the US dollar can have that kind of major correction, and then that could be a huge part for gold to test these previous highs, where it might want to be able to correct from these April highs as well. So we could see that polarity aspect play out with the US to the gold, and as well as seeing oil the way that it's going, that we could definitely be seeing an area of higher purpose for the gold, and seeing a downside for the US dollar as well. So super crazy stuff that's going on, you guys. We also took a position here for the USDJPY, or Great Britain pound Japanese yen. We have that on the 15-minute chart. We can already see that it's going into profit already, where price is basically retest. And I saw that there is obviously a huge rejection candle right here. So once I saw that huge rejection candle here in this area, that gave me confirmation. And then once I saw that again in the same area, I knew price was going to obviously retrace one more time. And then we just want to see it test previous lows. And it might not test exactly previous lows, because it looks like market is building up pressure. You guys can see by all these wicks that the Great Britain pound JPY is like looking for liftoff, like to take off, because there's just so much pressure from a lot of buy and sell orders, that eventually the market's going to just, you know, take off. And like we're going to see that across the board with a lot of these pairs, where the market's just going to just take off, kind of like how the USD Japanese yen already just did that, where it just literally took off, you know, where it literally dropped over 200 pips in a matter of, you know, a couple days. You know, just came all the way straight down with no swing lows or swing highs. So that's why like price is possibly going to do the same thing for a lot of these other pairs, just because, like again, like I said again, you guys, is that the end of the year is such a crucial thing for proprietary traders and dealing desks. They have to basically even out their books, and to even out their books, they have to get all of the traders that, you know, have made money or they're looking to make money. They need to drive them off the board, so they can be able to, you know, because at the end of the day, they have percentages they have to play by on their for their institution or their dealing desk. You know, if they don't you know, hit percentages every single quarter, then they can't feed their family, they can't go home, you know. So like they got to make sure that they can be able to do the same thing. So very crucial stuff, and why a lot of this market manipulation or a lot of these wicks can happen before a breakout. So we can see that the Euro USD as well is having that consolidation to the upside. We saw that huge rejection of price, and then now that huge rejection is showing that consolidation into another retracement. And then after this retracement has been formed, we are going to see an upside momentum. This isn't a long play. This is a very short play where market price is just going to test previous lows again to induce those sellers that it's still in a bearish trend. But we can see that the market's already making new structure. So we can see that the price is going to definitely be going into the upside, moving into higher directions in the near future once price is now corrected and making a sustainable, swing high. And a lot of these is that I'm really like trying to catch the breakout, which is a huge a no-no for a lot of people, is that don't always try to catch the breakout, because breakout traders, I mean, first off, they're one of the lowest percentage traders in the trading world. Breakout traders definitely, because most of the breakouts, they happen, but then they have drawbacks. So essentially you don't want to be a breakout trader, but a breakout trader or catching it at the low, and from a macro perspective, is huge profits, huge gains, because now that you can be able to see it from a shorter perspective, you go through these lower time frames, and then you put an entry there, and then you are able to maximize it from higher time frames. I mean, those are essentially big ways to make just a lot of money. So that's the thing that I like to do when I'm definitely looking for another breakout of trend, or I'm trying to see that reversal, is that I take into consideration lower time frames, especially like the 1 hour and the 15-minute chart. Well, 15-minute chart is where I take my entries, but if I'm looking for that macro perspective angle, you still want to look at it from a shorter time frame, because the shorter time frames are going to show you where price is actually going. It's like dissecting, a cell. You see that you have the whole entire cell, but then you see how the cell actually was working. You see the mitochondria, you see the nucleus, you see, that you start to see everything for what it is, and then now you can take a step by step into grasping a strategy that can now formulate into a higher purpose. So it's really huge things that the market can do once you see it from different eyes, right? Because a lot of these traders, it's not that they're bad traders, it's that they're just not seeing it from the other side of the paradigm, right? And because there's always good and bad, and all you got to do is just seeing it from the other side, the other mindset, which is always available at every single day. You can either have a good day or bad days. It's really your choice. It's the same thing with the market. You can make money, but you just got to see it from that side where the money is being made. And over time, once you start to, discipline yourself and start to see that, then it just becomes second nature. Your subconscious mind takes over, and then, you start to just make profit all the time, or you start to have really good trades over time. And that's when you start to, trading in general shouldn't be an emotional feeling, but you should be more comfortable with the way that you feel. So that's like a big thing with trading in the markets and structures and stuff like that. So what time frame do you base your trades off? So I base my trades off the 15-minute time frame. The 15-minute time frame is where I take my entries at. And what I look for is that I look for basically structure highs and structure lows of the day. And when I say that, I just look for so I like to see a lot of breakouts during the London session, especially between Wednesday and Thursday. But I look for the entries between when there's a consolidation, and then after I see an area where there's been a huge area of support, meaning this is a support area, and then obviously we see that drawdown, and then once I see this consolidation level, I'm looking for a short position, because the market has shown me structure, and then it's consolidating. So I know the next thing that's happening is a breakout. So the same thing with market price again. Market consolidates, look for the upside, makes that retest of previous highs. I'm looking for, we're still obviously in a downtrend, look for the consolidation, go to the 15-minute chart, look for London session breakout between, obviously this is earlier or later in the day of the 18th. So this was this was earlier today. Then we saw that breakout to the downside, and now we're seeing market retest back to those levels again. So that's what I look for. I look for market structures daily, daily highs, daily lows. I look for consolidation. I look for peak formations, which look like these, to know where the price of direction is going. And then I look to see where price is going to look to go again, where price likes to break and then come to the area, come down, and comes back up. And it does it over and over again. So I look for an area where market likes to come back into that same area before it drives price to a different area. Can you break down the difference, traders, and what they focus on, like what a trend continuation trader looks for, what a counter trend trader looks for, a price action trader looks for, etc.? Sure, yeah, Michael, that's a great question. It's pretty it's actually, you know, it's pretty simple. It's like when someone's looking for positions, and I can't speak for actually all traders because all traders have their own strategies, and I'm not all traders. I'm a counter trend trader and a trend trader. So when I look for these strategies, it could be different from another person's perspective. But what I want to show that most technical analyst traders, they look for support and resistance, and they look for angular support and resistance. But to determine where, if I'm reading your question correctly, Michael, is that look for, like, if it was a trend continuation, and if you're looking for a counter trend trader, you want to look for those daily and weekly drawbacks, those daily, the daily and weekly drawbacks, meaning that where the market starts in the beginning of the week and where the market ends in that week, you look for the in-betweens of that area where the drawbacks are, where the consolidation points are. So what I mean by consolidation points is that where the market has shown, let me go to a little higher time frame just so I can show more days. So for instance, say we go from, so okay, let's go for the beginning of December, okay? So say that I'm a counter trend trader. So basically I'm countering, and this is really not a trend, this is basically chop, but bear with me because I'll show you exactly what I mean. So what we look for essentially when we see these what we look for just in general is that price is going to move in a direction based off the range of previous highs and previous lows of that week, or it goes and it moves in between consolidation areas of psychological levels because the market is structured between those. And so we have to first formulate an area where there's going to be a defined support and resistance zone, right? So we can define that, say that this wasn't even valid. So say that we're just seeing from the beginning of the 13th and we see from the 6th. So we see that market price from this area, and say that this wasn't even available. Say that this price chart wasn't even on our charts. So say that we see that price is right here, okay? Market is spikes out of that area. That's first confirmation that price is going to go higher. Why? Because price always likes to trade off areas it's gone before. That's why a lot of these wicks, these huge wicks breakouts you see, price will push price back to that area, come back, consolidate, because price loves to break and retest, just like it broke this area of the high of basically this week, comes up higher, test this level once again. But knowing that price is already going to go higher, I look for confirmation that price is going to reverse to this area, and I'm looking for a buy signal, and I'm looking to take my profit. If I'm just counter trend or obviously day trading this, you're looking for it to get back and get out of this position at this previous high. So that's how you formulate a strategy that can be able to maximize the liquidity by having these available areas where market will show you support and it will show you structured legs by price previously, and not just that, where price has already basically broke out of. So for instance, if that were to happen, you know, and this came into fruition, excuse me guys, my voice a little messed up, but say that price comes into this area, consolidates once again, and then we know this area has been already formed. So this area has already showed market price already driven to. So now that I can see that price has came up to this area, it's drawbacked, and then now I can see that it could be another buy area. But now I'm looking for an area where personally, I'm looking for a psychological level. I'm looking for an area that is showing a zone that price will probably head towards. So I look for previous structure. So I'm looking for, sorry guys, the high possibly of that previous month. So this will give me confirmation, and I can see that wicks were at this area, this will give me confirmation that the market will possibly retest this area, because the market, guys, always retests previous monthly highs, previous monthly weekly highs, and daily highs, as well as lows as well. This is just the same thing, it's just a little opposite. So that's why counter trend trading and so forth is very important in that way. So I hope that answered your question, Michael, on how a lot of these, how to like trend and do trend continuation. Trend continuation, where we can, I'll go into as well. Trend continuation is pretty simple. So first I want to make sure I answered your question on how to do counter trend trading, or how to make sure how to buy those and sell areas as well. So hopefully that answered your question. But trend trading is pretty self-explanatory when it comes to getting into your entries. You're just looking essentially for, you know, the retracement of that high or low, and then you want to look for that daily high or low as well. So for instance, if you're doing a swing trade and you're looking at the 4-hour chart and you want to see price move into a certain direction, say that this was a high and we obviously didn't know that this was available, we look for previous structure low and we see that this is consolidation area. So once we see the consolidation area, let me just move these real fast. Once we see the consolidation area already formed, so now we know that price is confirmed that there's been a rejection here and here. So once that rejection areas are basically when price is showing a certain area of consolidation and it has huge spikes. That's just the market basically showing huge traps, because all these wicks are on all of these levels here and there is that there's buy orders in this area. There's buy orders above the market here, and they trap them. And then after they trap them, they consolidate, they give them time to basically buy again, and then they move price. They do the same thing. They consolidate at highs, they grab the buying orders, and then they drive price. And they do it over and over and over again. And that's how you basically know when a market is continuing, because it makes these highs and it makes these huge spikes, usually these morning stars and so forth. Is this for only day trading, or would this include swing trading? This is universal. All of these elements you can use these on the weekly, you can use these on the 4-hour. All of what I'm showing you guys right now, you can use this all together. You can use this on any time frame. Like you can break down the same thing. We talked about looking for those structures, looking for that where the market likes to break, it likes to retest area, right? We can take this. We're on the 4-hour chart now. We can go into this area and we see the same thing. Price literally does the same thing once again. Makes a consolidation zone, right? Just like we saw previously. It makes an area, comes down, tests one level, comes back to one level, tests that area again. So now that's the high, that's basically going to be considered to be the high of the week now, or the high, excuse me, this is say that this would be the high of the week now. Now we know that that's the high of the week, so market's going to retest that highs. The market always likes to retest the lows and the highs of the week, the day, the week, and the month. That's all they do. They go from one high, they make a high of the week, and then they test the highs of the week. And we're talking about during a consolidation period or a consolidation area, which is 50% of the time. So 50% of the time, you're going to see the area of the market just do this. It'll make a high, and then it's going to test that high. And then it's going to test that high once again, and it's going to test that high once again and trap as much buyers as possible. And once they get enough buying trades in the market, then they're going to drive you off the map. And then they're going to drive back, do it once again, give you the hands like I talked about, the wicks at the consolidation, and then they're going to drive you down. And then what they do is that they'll just get you back into that zone by making a huge polarity effect, which is called a peak formation or inverse head and shoulders. All they do is come back again and do the same thing over again, you guys. They do the same thing over again. They make a zone once again. Price right here. This is the zone. And I'm telling you guys, you can after you like do this over and over again, you could take this and like have it in your brain and then automatically use it on another chart that doesn't have any graphs. So then all they do is that they make a high and then they make a low and then they work off that low once again. That's what makes that W formation. That's why I'm so adamant about these W formation, is because all they do is that once they make a low, they'll consolidate price to induce you once again, and then they'll make another low, and then they'll move price and remember, test that previous high, because they love to break and retest, and they'll do it basically over and over and over again. So the wicks are grabbing money into the market. Exactly, Michael. The wicks are basically like, think of them like hands. I learned this from a trader actually here on YouTube. Think of these like a hand. Like all these wicks are basically are built. It's just grabbing these pending orders above this area. All this area is pending orders. We can't see them because we're not on a proprietary desk. We're not on a desk. We're not trading with millions and millions of dollars. So what is actually happening is that there's pending orders in this area that we can't see, but they're there. And that's why they make these huge rejections, because when the thing about your broker will open the spread, meaning when you put a trade in the market, you have basically a strict spread that you have to go by. It might be 2 pips, might be 3 pips, but sometimes the spread can be 7 to 10 pips or 15 pips or 20 pips during like a news event, during like a session changeover, when the market literally when it goes from a Sydney session to London session. When you have those session changeovers, they might open the spread. That's why when London session happens, it's so much volatility, because what they like to do is that they like to trap traders during a certain session, and then once the next session arrives, they'll take back all of the profit of those previous traders, and it does it over and over again. So what they do is that's why consolidation is the biggest part of the market, is because consolidation for us is still huge money possibilities, because consolidation doesn't mean that it's like very low volatility. It's $5.4 trillion. The consolidation in the forex market is like a trend in the stock market. It's still very, very huge because there's so much money. You can still make a lot of profit. All you have to do is find those levels, though. So even though that this is considerably a consolidation level, right, before another trend breakout, you have so many buying orders once you're able to form a strategy that can amplify, knowing that the market's going to break and retest certain lows and certain highs of the week and month and the day. So then you can now look into that and strategize that into your strategy, and implement that into your strategy kit. So I hope that answers your question, Michael, about how the market actually, or how these wicks actually formulate and why they formulate. Because have you guys noticed that it's always at the highs? It's always at the high. It's at this high. It's at this high. And I mean, it's at the lows too. It's always at the high and lows of the market. Why? It's because they're grabbing orders, and that's how you know that the market is going to reversal. And as well, really key elements on when the market is going to make these big retracements. So I know it's going to be a little tricky, especially when you're saying, oh, Brent, but there's huge wicks here and it's going towards the trend. That's the thing, you guys, is that once you find support and resistance, once you find the lows and the highs of the day or the week or the month or the year, once you find these lows and highs, the in between doesn't matter. It's like smoke and mirrors. It's not valid anymore. You're not keeping that in your mind, so you're not causing this static formation where you're confused. You stop you cut out all the nonsense and you just focus on structure and price. And that's how over time you start to make more money, is by not being dwelled into the oh my gosh, there's so much candle, there's so much going on. You say, no, this is one area, this is one area. Price likes to retest previous highs and lows. Okay, I see another stop at that low. Okay, now I'm gonna buy. You make it simple for yourself. You don't over amplify or over confuse yourself by having so much information embedded in your head. So consolidation is saving account and breaking out, is like paying the bills. Yeah, exactly. So consolidation is yeah, that's actually a really, really good terminology. Yeah, exactly. It's like that. It's like saving account, and breakouts is like paying the bills. Exactly. For them, it essentially is, and it definitely is, because the dealers, right, you're working with trillions of dollars. So these heavy hitters, right, like Citibank or HSBC or Berkeley or Bank of America, like Merrill Lynch, these guys, these proprietary traders are trading, $100 million accounts, $500 million accounts. They're trading huge account. So like when they see all these pending orders, like us retail traders, which make up only about 7% of the market, 92% of the market is ran by institutional banks and investment bankers. So we look at it and we see like, okay, they probably see us, you know, laughing at us because we learn all these things, the technical analysis. We learn like, oh, structure and support. And we learn all these simple elements. But if you don't know and define how market structure is, there's no way you can make money over time. It's impossible. It's literally impossible because you can't make money on something that you don't know. Like at the end of the day, like if you don't have a strategic formulation over time, and like you do it over and over and over again, and if you don't know what market structure is, if you don't know the 4 elements of structure and price, it's really impossible to make consistent money over like, you know, 5, 10, 20 year span, because like you have to be able to play through all different market structures and all different elements, and all in your strategy, which with this strategy I'm teaching you guys, is available for everything. This strategy works on every single time frame, on every single market that's ever been made. All it is market structure. It's market psychology. That's all it is. It's not like the strategy that I'm teaching that's like has this crazy like, no, I'm only teaching you guys market psychology. I studied like a couple books. I basically did this like I had a mentor, and he taught me how the proprietary traders basically trade. And then I looked at banking and investment institutional strategies on how they like to push the market and drive the market. And then I back tested the work for about 2 years. I strategized and I looked at every single market, basically a recession, every market that's been available. And then I use this strategy, and it works on every single strategy. They work on every single time frame. They work on Bitcoin, and Bitcoin is as well as a currency. They break and retest. They make consolidation. They make the wicks. They basically get you in the trade, and then they stop you out. Once they do that, they'll drive price back to previous highs, and they'll do the same thing over and over and over again, because at the end of the day, the market is like a casino. Essentially, they're going to give you some money, but they're not going to let you go home and buy a new house with that money. That's why there's only so little professional gamblers, because a lot of people aren't willing to take the time out and sacrifice really how a casino really works, how to really strategize how the market really works. So it's really important that this is, it's not hard, but it's definitely takes time though, just like anything else, right? Anything else just takes time. I sucked at this stuff when I first started trading. I was blowing accounts left and right when I first started trading like 6 years ago. And then once I was able to understand this and just over again, practice over again, chart after night, studying, then it became easier, because then I have my brain, right, started to synchronize with what I've learned and what I know works, because your brain is like it's an adaptable programming system. It basically will formulate systems to calculate what is best or most value to you, right? Your values and your beliefs are strictly correlated to what you believe in. Same thing with your actions. If your actions are correlated with your beliefs, essentially you'll do the same things in the stock market as you will in life, because the stock market is literally life. There's ups in life, there's downs in life, there's consolidation, and then there's a breakout. Life's literally stock market. And then if you can able to amplify your strategies by implementing the human psychology, you can make money over time, because all you're doing is that you're looking at fear or greed and fear. That's all it is. That's all what higher highs and lower lows are. Feed and greed. When are people looking to get out of the market? When are people looking to get in the market? And then over time, you'll start to see like a huge pattern. It's just pattern recognition at that time, because human behavior is a pattern and it's predictable, right? People are like, oh, I know that guy. I know how he's going to act. He acts that way all the time, right? You guys, we all have people like that. We all have people that way. We all have people that we came across our life that we know how they're going to act. So what's different from that in the stock market? Stock market's the same thing. It's humans driving price, or quantum, proprietary traders on computers But those computers, algorithms, are based on human psychology. It's just based off human electromagnetic frequencies at the same time. And we'll talk about how the moon cycle is correlated with the cycles of the mind, but that's essentially how it is. It's literally just all, it's a matrix basically, right? It's an algorithm. It's a set stone algorithm that plays off highs and lows of people's mindset and then tries to control that mechanism by having energies, which are thoughts, implemented into your brain, and then these thoughts are now correlated into your mind and into your body through your neurotransmitters. Your neurotransmitters now tell your body to do something, right? That's what the market plays off. They play off the same systems that you do with your mind to the market. They know when you want to buy a lot. They know when you want to sell a lot. That's why they do the exact opposite, right? The Rothschilds had a secret. They said, when there's blood on the streets, buy real estate. When there's terror in the streets, buy real estate. When things are going bad, a lot of things are up for sale. So it's super simple to use that, just like Bitcoin right now. There's blood in the streets, you guys, with Bitcoin. This is the time to buy. This is when all the proprietary traders, this is when all the big institutions are buying the coin. Because why? It's because just like anything in human psychology, when there's scarcity, there's obviously the opposite side of that is prosperity. It's just a polarity in the universe, you guys. There's just two elements to everything. There's always two sides. So when there is scarcity, on the other side of that is prosperity. So when people are scared, other people are getting rich. That's why some of the richest people are becoming the richest during a recession or during hard times. And I know that it could be very like different, but it's definitely something that I'll tell you guys later on. So Michael, I appreciate that, man. We definitely need to talk. Definitely need to talk, brother. It's really an honor to have you on here, and it's an honor to have everybody on here. If you guys have any questions, you know, I'm going to talk a little more, you know, like 10 minutes more about, you know, just this stuff because, you know, I want to let you guys know that trading didn't become like easy for me through learning technical analysis at all. Like I read every book I read like at least 150 books over technical analysis. Even if like I was just reading like little like 5-page books on market breakout, market structure, Fibonacci, harmonics, Ichimoku strategies, divergence, everything, right? Everything you can think of. But at the end of the day, I still wasn't making profit. What made me start, what helped me make profit was learning human psychology, because then I could now understand recognition and patterns, because these patterns that formulate are going to happen over time, over and over and over again. And you don't need any indicators to amplify these patterns, because these patterns are correlated with our minds, and our mind's the indicator. Because the thing is that once you're able to understand these different percentages and different market structures and market psychology, human psychology, your brain naturally starts to look for the better system, just like an algorithm, just like the matrix, where there's two different books in the market. You have an A book trader, which is making a lot of money, and a B book trader, which loses 90% of their accounts in 90 days. The A book trader makes money over time. The B book trader makes some money and then he loses his money and blows his account. So the algorithm is set where they will bet against the broker that you put your money in. Say that you put money in forex.com tomorrow. They will bet against your trade, meaning they will hedge your trade. If you were to get a buy, they will do a sell, because they know over time they're going to make your money back. But when an A book trader plays, they know over time they're going to lose their money. So then they want to go towards where that guy is going. And that's the same thing with the universe. Your mind over time will gather momentum. And the same momentum that is quantified will start to gather rapidly. That's like when people, it's called a paradigm shift. It starts when you have momentum established, this energy vibration start to establish, then it starts to rapidly happen, and then it goes into a repetitive formation. And this repetitive formation now makes a pattern. It's called emotion, energy in motion. That's all it is. It's just energy. All this stuff that we look at, this charts and everything, it's just energy. It's just energy that's been looked at as a financial structure. But finance in general, essentially, is just energy. It's just based off the same stuff. That's why you can use the Fibonacci sequence. The Fibonacci sequence is the same thing. It's correlated with our brain. Everything is totally in sync, right? Even, you know, like, that's why when people are saying, like, okay, is it possible to be, you know, always make profit in the market? Essentially, it is. It is very possible. It's going to take time, and it's going to take practice and the right work. Because working hard, if you're not working the right way, you're pointlessly working. You're not working, you know, to learn. You're doing busy work just to look good. It doesn't work. If you take time and you learn the right ways, though, and you learn about these things, I'm telling you guys, your whole life will change. Like, your whole life will change when you learn about how the energy applies to the universe, or how the universe applies to you, because this is essentially your universe. You know, it's your inner verse. It's your universe. You basically are the master of this universe, and you can be able to use this for your assemblance and your creation. All you got to do is just essentially create it by, you know, by thinking. You know, the book essentially, Napoleon Hill, Think and Grow Rich. The book itself says think and grow rich. Why would a book be called this? And this is like one of the most profitable books in general. So we have not capitalized yet. What's called $1,000 will whip out all the mess coins. What do you think of the volume profile? Can you use in Forex? I see that a volume profile always visits on nodes. Yeah. So a volume indicator, which is a daily range, you can use it in all. I kind of use the daily range, but since I have it already, I already know most of these pairs, like their daily range, so I kind of have it calculated in my brain. But, you know, yeah, you can use the volume calculator, but most of the time, like, they're available for you, and you can use this, you know, on any time frame. You can use the volume indicator, but do I personally use it? No, but I know traders that use the volume indicator. But, you know, I do have a range, like I know the range indication of basically all the major pairs that are on the ECB market, and know like the pip like of the day is going to be. So like if it's gonna be 80 pips of the day, it'd be like a Thursday or so forth. So like I know the average percentage of that. So I'll definitely have that available. And, you know, I'll have it available in tomorrow's session. And if you guys have any ideas for stuff that you want to learn, please put in the comments as well. And if you guys can like this YouTube live stream, that'd be awesome as well. I really appreciate you guys' time. And yeah, if you guys just have anything else, I know I can rant, but last thing I do want to end a note on. If you guys have any more questions about trading, where the market's going to be, feel free to ask now, because I'm about to just go on, just tell you guys a little bit more, and then I'm going to be in the Discord and go from there. So last thing I'm going to end this live stream with is that Napoleon Hill was who was a predecessor of Andrew Carnegie, right? Andrew Carnegie was basically one of the wealthiest men in the world at his time. Napoleon Hill was like I said, a predecessor, meaning he just went over and under. Okay, so cool. Grabbing a pound JPY. So it's pretty simple. What Great Britain pound JPY is looking to do is that it's having essentially a. So, for instance, are you looking from a short time frame or a long time frame, Michael? Are you looking from an intraday or swing trade perspective? Just so I can calculate correctly. Okay, I'm just gonna take that as a swing trading or a intraday. So I'll do both. Okay, so what USDJPY is doing is that you see that the market is coming down from a downtrend. So this is what I'm going to teach you guys, and this is why like it's really backtesting is really important. So market makes a high. Okay, we're going to draw that out there. Market makes another high. We're going to draw that out there, okay? Cool. Now we have consolidation. So now we can see per day the consolidation range pretty low. So now me knowing that, I know that this is liquidity buildup. Liquidity buildup, just like how it's always been, you guys. They build up liquidity before they make a run. It's always happened. It's going to happen again. So this is just liquidity buildup. So we're going to draw the rectangle right here. Now we're going to see where price is showing wicks, where they're opening the trades of pending orders and so forth. So now we have this one and this one. So now we can see that price is potentially going to reverse to the upside. But we got to look for confirmation. This is the last structure, right? So we look for that last structure, and then we see a resistance here. Same with this area here. So now what we want to possibly see is that market can make that drawback, right? Induce a reaction. So the induced traders, they could possibly do a stop hunt. They can do it really low, or they can do it minorly low, right? Consolidate, and then when time happens, break out to the upside. Test this previous structure, and then move off that structure, make a new high. That is essentially what price is going to do for Great Britain pound Japanese yen, right? Market structure, market low, market high. Market will test off that previous high, but it will make a low first to induce those buyers or induce those sellers to go short one more time. Once they have all this liquidity trapped up in this area, they have to move it somewhere. And where's the best way to move price? The opposite direction of where price is going. And this is essentially over and over and over again, this is going to happen in the market again and again. So you want to have the daily. So the daily essentially would be the same thing, right? Market showing, oh, it's even better on this one. Market showing, right? Same thing. And that's why I'm saying, you guys, this is on every single time frame. Market high, right? We'll name the highs. Okay, this is consolidation. This is the highs. Okay, let's leave where the lows are. Okay, this is the low. Now let's see where structure and price is. Liquidity is all trapped in this area. Okay, they're going to have a false breakout. Test, induce, hit your stops. That's all it's going to do. They're going to test, induce, hit your stops. They test you by buying, they induce you by shorting, and they hit your stops. They do the same thing. They test you by selling, they induce you, or excuse me, sorry, I messed up on that one, you guys. They're going to test, induce, hit your stops. That's what makes this formation. Test, induce, hit your stops. Test, induce, hit your stops. It's a formation that the market has played on, right? Just like whipsaw. Market make a structure like this. Goes up. That looks very familiar. Isn't that the same frequency your heart makes when you go to the hospital, right? It goes up, goes down, goes back up, goes down. Watch. If I do that same structure, I bet you I'll find like 6 of these in the course of like 2 minutes. 1, 2, 3. 1, 2, 3. Oh, that's a bad one. That's a bad one. Actually, I'll do this tomorrow, you guys. I'm actually going to go tonight. I'm going to do like a couple back testing. I'm going to go through the market. I'm going to find all these structures I talk about, and I'm going to have them mapped out for you, because then you'll be able to understand it a lot better. Because I can just rant on this, but if you guys see it and if you can picture it and it can go into the cerebral cortex, then now your mind can start to assemble that new paradigm available towards you. So I'm going to actually create that for you guys and get that available. So last thing I'm going to end this live stream on is that complete. Thank you guys for being on this live stream. Last thing is that what you think will manifest. That's essentially been proven over time, because like I said, Andrew Carnegie was one of the richest men in the world. Napoleon Hill was his predecessor. Napoleon Hill made a book called Think and Grow Rich. The book itself says think. The reason why the book says think is because your thoughts have energy. Your thoughts, what you correlate with the law of attraction, what people always want to talk about, is just perpetual electromagnetic energy that the body produces. We produce perpetual energy. That's why, like, when you think about your friend and they calls you like 2 minutes later, it's because you're on the same frequency, and that energy signal goes to him, and he receives that, and then he'll call you. It really works like that, you guys. It's literally been proven by science. It's a quantum standard. So when you think, and I'm saying this because the stock market's the same thing. If you think you're a trader that's a bad trader, you will be a bad trader. Your body has to react to what your mind thinks. It can't not. So when you think the same thing on the opposite scale of that, if you think you're a great, prosperous trader, you will be a great trader. So what do I do, and how I started trading and making money is that I used to do affirmations. I would literally write on my journal like 100 affirmations a day saying I'm a prosperous trader. And over time, my body and my mind started to rearrange my neural responders, my neural receptors, and my cerebral cortex into creating a new paradigm. All your brain is a computer. All you have to do is put in a new hard drive in that computer, and everything delivers differently, because what you think now on that other scale will manifest, right? I literally took my one paradigm from fear, worry, doubt, frustration, anxiety to I'm happy and prosperous, and then checks started coming in, $1,000 checks started coming in, you know, making more money in the stock market coming in, right? It's literally you can do all this. It's a life hack, and you don't get taught this in school because school doesn't want to teach you how to be a freaking a divine creation of God. Like, why would schools? Sorry, I don't have anything against school, but school doesn't teach you how to be a financially entrepreneur, prosperous being. It teaches you how to be a slave and work for someone else. And just being real. You gotta take this into consideration and learn this yourself, you guys. You gotta read books outside of school. You gotta discipline yourself. You gotta take time and really work hard. That's why there's not that many millionaires and billionaires, because those billionaires and millionaires are willing to do what 90% or 98% of the people won't do, which is read on a daily basis, which is do affirmations, which is to do positive thinking, which is to not be a victim to the reality, which is to keep consistently growing, which is to not take criticism as defining their character. It's just growing you. Because once you now can have that available, now you can make a new reality, and it's all up to you, because no one else is going to do it for you. You know, it's really up to you. So it's really cool stuff, you guys, that, you know, I'm glad you guys are on this live stream, and I do talk about this because it is important stuff. You know, making money is cool and great, but if you don't have the vibration of money, you're never going to make money. It's essentially impossible. You're going to make whatever your job makes you, but you'll never make more money outside of your job if you don't have a prosperous mindset. You'll just be living like, you know, hand to mouth. It's literally like a different thing. So I'm really happy you guys are on this live stream today, and you know, just take that into consideration. You know, don't beat yourself over it. You know, it's a process. Like, I'm still learning this. I still make mistakes. I still, you know, people still get on my ass every day. You know, there's still things that I have to work out in my life. I still have days where I'm feared and worried and doubt and stuff like that. You know, but knowing that and accepting or not accepting that and willing to change that, not be a victim, that's when you become a better person. But once you settle and just take it, you know, you get what you put in this world. It's called the law of cause and effect. It's literally a law of the universe. What you cause is what you affect. What you reap is what you sow. Everybody heard that saying. It's the same thing. It's the same thing. So really appreciate you guys being on this live stream today. Hopefully I didn't chat too much or, you know, talk your ear off. If you guys have any more questions, feel free to put in the comments. I'm going to get off in the next couple minutes, and tomorrow I'm going to make sure that I have these formations available for you when I talk about the whipsaw, and then I talk about the induce, hit your stops, and why the market works in those areas, because all these formations are formed for a reason. There's a reason behind all this. It's not just like this random thing. It's really actually like an algorithm that's been set in the universe. It's a simulated universe, basically. It's an algorithm. So it's based off these things. So I want to teach you guys how this can work, because once you let this work for you, and you use what I just ran it on, I'm telling you, your whole life will change in a matter of a week. You know, it only takes that long. It doesn't take long at all. So wish you guys the best, and I'll see you guys. I will be on tomorrow at 10:30. Yes, I'll be on at 10:30. I really appreciate you guys being on today, and I will see you tomorrow. And make sure to like and subscribe if you guys are new to this channel. Brenton Walker here with Traders Profit Club, logging out. Bye, guys.